Well, ladies and gentlemen, welcome to our panel session number 2, following on from last week. The one we did last week was extremely successful. We're not wearing masks today on this broadcast because, number one, there is an exemption. You don't have to wear a mask for a broadcast. And number two, we are not sitting together. We're all in our own space, so very safe. And lots has happened since last week, hasn't it, ladies?
Yeah,
absolutely.
Really busy week.
Yes.
Lots of action.
What's the first 24 hours? What's our take on the mask? How's that been received?
Yes, well, it's just another thing that we have to do and be mindful of. I stepped outdoors and I took 5 steps and realised I haven't got my mask on. So, yeah, back inside I went. But, yeah, other than that little mishap, we're okay. We're adjusting. We all have to wear it just so we can get past this, what we're faced with, so we can just move on with our lives.
The pandemic off the pandemics.
Sure is.
How was your first day with the mask, Nikita? Obviously, I'm sure you've already been online searching for a Louis Vuitton or a Gucci mask, a bit of a fashion accessory. I heard, I got told that they are already in production.
Amazing. I can't wait. I have to get my hands on one of them.
That's right.
No, it was really good. I think it's not too much of a change for me personally, because although we are still conducting private inspections, just for that peace of mind for that person that we're meeting with and our owners, I'm already wearing face masks at inspections. So the only thing that's changed is it's just wearing it a lot longer rather than taking it off after the inspection. Now it's just, I'm making sure I have at least like 3 or 4 in my handbag, 2 of my laptop bags, just so
I've got a box in the car. If anyone's running short, please call out.
Yeah, exactly right. Yesterday, Mia posted a photo. I'll show, if you can see my screen, a photo of our Ray White Cheltenham, the new look, the new uniform of the Ray White Cheltenham sales team was a pretty popular
post.
Guess
who's smiling? Guess who's smiling behind the mask?
Not me, that's for sure. Oh, that is so funny. So talk to me. Last week we went live on Wednesday, and by the way, thank you so much for everyone that watched our video and shared it as well. We had numerous shares, plenty of comments. We ended up with just close to 7,000 views in 1 week, which was absolutely extraordinary. So we didn't realize that the uptake of this content is going to be so powerful, but people absolutely love it. They're enjoying the content we've been discussing as well. And I guess it's a hot topic at the moment, isn't it? Every week, like I got off the phone to a potential seller this morning, and the question was, what do you think is going to happen? Is the market, and that's obviously the title of our discussion today, is the market going to drop 33%? Well, my simple answer was only Jesus and Daniel Andrews knows. But there is a lot of talk about it. And maybe only Jesus knows, because there's a lot of people are saying Daniel Andrews doesn't know. So don't know where we stand on that. But just to give you our viewers a bit of context, how have the last 7 days been?
I think there's definitely been a lot of activity, that's for sure. Things haven't stopped. Things haven't slowed down. Buyer inquiries are at an all-time high at the moment. We're getting more finance referrals through to our in-house broker as well. And, we've sold quite a few properties, some pre-auction, some at auction. We've had pre-auction offers and, off-market properties that are selling. So things definitely aren't slowing down. But going back to what we discussed last week in terms of properties not selling for, a massive price over reserve, we aren't seeing that, that's for sure.
What was the highlight for Saturday? We had 5 auctions.
We did. We had 5 auctions. What was your
favourite one?
Definitely 54 Wellington Street in Cheltenham. That was a great auction.
And why was that?
That one did sell over reserve. I think it was 41K over reserve, which is awesome.
Yeah.
Owners were absolutely wrapped. Purchasers were over the moon because they've been looking for so long. And it was a great result for all of us in the end. Yeah,
couldn't agree more. And what was your highlight from the weekend, Angela?
Well, my highlight was the sale of the property that I sold at 4 Callaghan Court in Cheltenham. So that's where we finished off last week's broadcast. We mentioned to our viewers that we We did have 5 auctions scheduled for Saturday. 2 of those had already sold the day before. So we conducted 3 on the Saturday, one of yours being Wallingford, one being Lower Dandenong Road, Parkdale, which I think since the owners have decided to lease it instead. It's just a better return for them. And 4 Callahan Court was a standout for me because I guess we used a couple of different methods there. Surely we took it online and we had 3 or 4 people registered a bid, which was exceptional. And I think they're the numbers that we're seeing typically in Melbourne and even across the country. So good, strong bidding registrations. So this one here, we had good bidding up to a certain level, and then we did pass the property in live. So our viewers actually got to see everything as it was unfolding. So we had it on pause for a little while. We were back and forth on the phone with our buyers, with our owners, and really ensuring that we're going to get the best outcome for our clients, of course, and working to help the buyers. In the end, we sold it to the highest bidder. That property sold for $1,001,000 for a property that's not updated over near DFO on a good block there. And it was passed in and we negotiated afterwards, and the strongest bidder won there. But just to show you that it's not necessarily a failure if it doesn't sell under the hammer. We worked for an hour and a half following and we got the job done.
And that's really interesting, isn't it? Because there's a lot of talk at the moment. We hear people constantly have the question, how do live auctions work? Are they different from street auctions? Do they work? How successful have they been? One of the trends we've also noticed is there's a lot of people converting their properties to private treaty at the moment rather than going to auction. And now we've definitely seen that that's probably not the most effective method of sale right now. I mean, as we know now, the market's driven by 2 key things, cash and confidence. And when they're both a little bit low, the last thing we could do is give all the control to the buyers to nominate a timeline and the terms around how they choose to purchase. So
exactly.
Would you say that having those deadlines in place, even when the property passes in, having those deadlines in place helped significantly, having those buyers mentally prepared to act on the day as opposed to having no deadline?
Absolutely, 100% without fail. Yeah, exactly right. I mean, both the vendors and the buyers in this instance saw it unfold in front of their eyes. They both received a snapshot of the marketplace as it was. They all saw that there were several bidders involved, and we did get to the highest price. Now, I can quite confidently say that if this was a private sale, we wouldn't have achieved this price. Because really, in this market, how can you set a price on a property? How can you list a property for an asking price? What is the market going to pay? We had a range in place, and we drove the price up to the highest amount, and there you have it. So, if it was a private sale, I dare say it'd be sitting on the market for quite some time. Yeah,
totally. Couldn't agree more. And with regards to Wallingford Street, that was a very interesting story. So as far as what we've been made aware, this is the highest sale price for a 3-bedroom home in Cheltenham since COVID, just shy of $1.2 million, which is obviously a massive price.
Great
Who bought the property?
Young couple, first-time buyers. They're basically just looking to start a family soon, and they've actually been wanting to get into that pocket of Cheltenham for quite some time now. However, they were very specific. They had a niche criteria in terms of the property that they wanted, and this property wasn't perfect for them, but it had the criteria that they could make it work for them. So that's I guess why we went through it. One of the conversations that we actually had with that purchaser was, she has noticed that a lot of people are saying they're just going to wait out. They're going to wait it out. They'll wait until, spring and see what stock comes on the market there. And, the conversations that I've personally had with a lot of buyers is probably around 70 to 80% of them are saying, actually, I'm going to wait out. I'm going to wait. So it'll be very interesting to see what happens to those buyers, or even, stock levels or prices in terms of, sale prices for properties later on, when everyone decides that they're waiting, that they're actually going to purchase, because everyone's going to be competing against each other.
They'll all enter at the same time.
Exactly.
So it's the fear of not competing is what creates the competition. It's like the complete opposite. I read this story about eBay, where this was eBay's concept. As we know, eBay was one of the first websites where there was an online auction for almost any item you could buy. If there was a pair of shoes listed, there would be a buy it now price of, say, $100. And then on the side, there'd be an auction running where you could place a bid for say $50, and straight away it'd be outbid. Another bid comes in 55, and you just kept going back and forth, back and forth. In a lot of cases, people ended up paying either what the asking price was in the end, or something above, because of their fear, where they sort of go, I don't want to pay the full asking price. I'm going to enter an auction, and they end up paying more in a lot of cases. And these live auctions, in my opinion, are no different, because, like you said, Wallingford Street, number 54, we had 3 registered bidders. Only 1 participated. And they made their first bid at $1,025,000. Is that right, Nikita?
Correct.
And we went back and forth. And I think that's a really interesting part of this live auction process, where we work with these bidders. We went back and forth with them on the phone. We paused the auction several times, spoke to the vendor, spoke to the buyer, got them to increase their offer through the platform. And the only thing that really worked in that instance is having some time constraints. In that scenario, from a seller point of view and from a buyer point of view, there are some time constraints. So you need to make a decision, and these buyers clearly had their heart set on the property. And very good choice, by the way, because Wallingford Street is an incredible, one of the most popular streets in the area, and an incredible pocket, their Golden Triangle. But they ended up paying the full asking price because they just wanted the home, and it didn't matter if the other 2 bidders chose to participate or not, because there was a time constraint and there was only 1 or 2 options. They either make a decision today or let it pass in, and then they'll be competing with subject to finance and all those other criteria of buyers, right?
That's right.
Angela, a couple of sales prior to auction, didn't even make it to auction. 3
That's
sales, actually. Central Park, Primrose, and Alice.
Yep.
How did that happen?
Yeah, well, look, I guess each of them sort of had a different story behind them. But look, buyers just saw really, really good value in the properties and decided to bite the bullet and move forward. And of course, we're monitoring these campaigns throughout the process. We're seeing where the interest level lies. And of course, if we feel for our clients that it's going to be the best decision for them to sell prior, we'll be making that recommendation. Ultimately, it is going to be their choice, but as their agent, we need to be giving them the right advice. And in all of those circumstances, it was the right advice moving forward. Now, would have someone come along in a week, a month, or however long to pay more? No one's going to know. But in that time frame, there was a willing buyer and a willing seller, and everyone was extremely pleased to move forward, and everyone can absolutely move on with their lives. So, yeah, really exciting time. I was really happy for each and every one of my clients. And
Alice Street, interesting story. Do you want to talk about that one? Well, large family home. Owners obviously very stressed with the auction process. So you navigated, you held their hand, you navigated them and helped them through the whole process. And you sold the property, you still negotiated a really good price for them. And unconditional sale?
Unconditional sale before the auction, yes, absolutely. So look, it was quite a unique property. The land was quite generous, but it wasn't your conventional sort of layout, just having a big family backyard. It was wider than longer. It was a really good family home, quite generous in size. And I guess it's not going to appeal to everyone, that layout, the weatherboard and so forth. So we did have a very, very strong buyer showing interest very, very early on. They put up their hand. We spoke to them during the campaign. And look, we negotiated a price. The owners were very happy to take it prior. We certainly gave them a lot of time to think about it. And at the same time, doing everything that as agents we have to do, communicating with other buyers behind the scenes, just to ensure that there's no one else out there that's going to miss out, because you've all heard it time and time again, how many buyers that you meet say the agent sold the property before auction and no one got back to me and I would have offered and all of this. So we had to do the right thing and reach out to everyone who had inspected, and no one was at that level. So we negotiated at the highest possible price, and the owners were stressed out and they had other things going on behind the scenes as well. So really happy outcome for everyone.
Yeah, beautiful. That's good result. Last weekend, extremely exciting. 4 out of 5 auctions sold. My highlight though was all 5 auctions had registered bidders. One of the stats we spoke about in the last week's video, live auctions do get more registered bidders than actual street auctions, and maybe it's because it's less intimidating, it's more comfortable, or all of the above. The first auction that didn't sell under the hammer, the gap between the reserve and the highest bid was $40,000.
The first one
Yeah.
in Parkdale.
Yep. $40,000
gap.
gap between the highest bid and the reserve price. So not a big gap. There was still
Yeah.
plenty of bidding and a very small gap. So we did get very close to it, and we're in the process of hopefully getting it sold this week. Before we bring Peter D along, Peter D is going to join us today, and he's going to talk about, the finance side of things, because that's, again, one of the hot topics, a very important question as a buyer and a seller, because generally if you're selling a home, you're coinciding that with a purchase and vice versa. Peter D is going to obviously talk to us today about, what's happening in the finance world, how things are progressing, pre-approvals, bridging finance, all those sorts of things. But before we bring him in, what's our overall feel of the market at the moment? If you're a seller, should you pull the trigger and go to market now, or should you wait? Nikita?
I think it comes down to their own personal circumstances. The best time to sell is when they're ready. However, if they're looking to put it on the market ASAP, I'd say go for it. Absolutely. There is buyer confidence out there at the moment. And there are a lot of buyers that we're meeting on a daily basis that are looking to purchase a property. And there's one thing that we're hearing all the time: there's just no stock on the market.
Yeah, definitely a good time to capitalize on it. Right? We used the line at the auction on the Saturday: early bird gets the worm, early bidder gets the home. I was very proud of myself because I just came up with that in the moment while the auction was running. So it was pretty funny.
Can I just touch?
Yes, you'll take
Sorry,
on that.
Go on. Finish off your saying.
Yeah, no, that's just the line. So you take over.
Oh, okay, cool. I guess I did read some interesting stats, and for anyone out there who does want to get updated, obviously, please tune into our broadcast every week. But Ray White, as a national, international company, they do produce a weekly report, which is called Ray White Now, and that collates all the data from across Australia, and it does show exactly where the current market is overall, and we're speaking averages across the country. But I did read that during this second lockdown, there were less withdrawn properties. So compared to, the first lockdown that we had, of course, a lot of people pushed the pause button and properties came off the market because no one knew what we were in store for. But this second time around, with the stock that we did have on the market, there were less withdrawn properties, which is showing that owners are feeling a little bit more confident. And the more confident these owners feel, the more confidence it gives other owners as well. And the stat that I also read was across Australia, we actually have 2.7% more properties on the market than this time last year.
Okay.
So
very interesting.
That was quite interesting. So I think just confidence breeds confidence, doesn't it? So we are seeing a few more properties come on board. Still good inquiry, and I think that that now is a great time with more confidence generally out in the marketplace.
Totally, and I've just shared the Ray White Now report on the screen. You can get the link. I've posted in the comment section below as well. And we update this each week. So this is the data from our Ray White 1,000 Ray White offices nationally. So very powerful data to have a look at, and should there be competition for the home selling in the current climate. They cover, if I'm considering selling, why should I go to market now? They've covered some really interesting topics and backed it up with a whole heap of data. And this good-looking man you see
and
here,
Kevin's photo.
Yes, we got featured in there too. So that was really nice. So that's good. Thank you so much. That's really good insight. Now I will bring Peter D on now, and I think there's a lot of questions that he'll be able to answer for us today. Peter, welcome. You are live.
Thank you, Kev. Good morning, Nikita, Angela. Nice to be on the show with the team.
Mate, welcome on board. Welcome to the live session, and you're our guest today. So we've given the viewers our background. Peter D is our head broker from Loan Market, affiliated with Ray White, deals with possibly, would you say, over 30 different lenders?
We've got over 40 residential lenders now on the panel, so it's an impressive list there.
There you go. Compare the market. You know those ads you see on TV, meerkats. Compare the market. That's you don't
We've got our very own.
Any of that. We've got our very own in-house. Compare the market. Excellent. Very good to see you, Peter. I'm gonna kick this off and ask you the first question. How's the finance market at the moment? I know, broad question, but how is it?
Yeah, look, banks are still wanting to lend. They only make money if they lend money. and like any other business, they do want to get it out the door. They are a bit more cautious on their credit assessment. They just want to have confidence that you're still receiving income and are employed. So that's been most probably a bit of a closer interview or questions to the client. Are they COVID affected? Are they receiving JobKeeper from their employer? It doesn't kill the deal. It just means if they are receiving JobKeeper from their employer, and I think there was 6 million employees receiving JobKeeper at one point, is as long as the client is still doing hours for that job and that just part of their salary is made up by JobKeeper, then banks are still happy to lend. Yeah.
Yeah. Okay. Excellent. So if you are a buyer that's looking to purchase a property, you shouldn't be really nervous. The best thing they can do is just pick up the phone, give you a call. You'll be able to run their criteria across the panel of 40 different lenders and give them an answer rather than them sitting at home wondering, can I get a loan? Can I not get a loan? Because like you mentioned, the only way the banks are going to make the full-time job of a bank is to lend money.
Correct.
So the government's doing everything possible to keep everyone else in job. The bank can't afford to go out of a job. Of course, they're going to keep lending money, and they want to lend money, and you are the person to help them with that.
Yeah, absolutely. And you've hit the nail on the head there, Kevin. People are sitting at home thinking that the banks won't lend them money. And that's just not true, right? If you can still show that your income is steady and that it hasn't been impacted due to COVID, then they're still happy to lend. Where we're seeing a little bit more challenge, and it's a little bit harder, is that self-employed market. And that's where you definitely want to be making sure you're engaging with a broker about different lending policies with the lenders. Like up until today anyway, ANZ has not actually changed their self-employed policies. So we could still get deals through their pre-COVID policies and not have any troubles. Now, they do have some updates coming through in August where they're just wanting to see maybe a BAS statement to confirm that your income's still coming through. But in the PAYG market, there's still plenty of options. Lenders are still open for business. And we're seeing some of the second tier non-bank lenders get quite aggressive, where they had traditionally been lending maybe to clients that were on the border of prime lending, you know, the cheapest possible rates, and non-prime lending. They really withdrew from the market when COVID hit because it affected their existing clients. But now they're seeing those clients are still getting income and they can still lend. So yeah, there's amazing rates as well.
Okay. So second tier lender, you mentioned, what an example of an organisation that's a second tier lender? Just so
yeah, so I think
people,
yeah, so I'm a Queenslander at heart. So Australia's largest second tier lender is a company called First Mac, who is based up in Brisbane, are the major sponsor for the Broncos, who unfortunately haven't won. Oh, I think they've only won one game.
They're not having a good run, are they? They got dumped last week.
They did, but you're seeing these non-bank lenders still with rates of 2.69% for a variable home loan, which is cheaper than a major lender for a variable home loan.
So what you're saying is it doesn't have to be the big four. The options are absolutely endless, like a lot of times, and that's where the broker. The story I always tell clients, and I know Nikita and Angela tell the same thing to every buyer that's potentially looking at borrowing money now, is if you went to a bank A, say for example ANZ, and based on your circumstances, if Commonwealth or this second tier lender is a more suitable lender, ANZ's not going to tell you, okay, based on your circumstances, we are not the best fit for you. That particular bank across the road is, so go to them. Yeah. They're not going to do that. The only way to get clarity around that situation is to go and meet our own, compare the market. I don't know if that sounded well, but compare the market person. Yeah, that's it. C to D is the person that can literally look at the meerkat, that can be the meerkat for you. He's extremely fun to work with. He's a very good golfer. I've seen that firsthand, but more importantly, he's an intelligent broker. He can look at his circumstances and go, well, based on your circumstances, this is not the lender for you. This is a better lender for you because this bank, their files, and this is their criteria, and you're more likely to get a better deal out of this bank. And something I'll never forget, you know, you mentioned to us several times, it's such an undervalued thing. People don't invest enough time in testing out what bank's going to give them the best deal. Because if they're going and borrowing, say, for example, $1 million on 4.2% interest, that's $4,200, and the next lender comes along and gives them 3.8, that's $400 of savings for doing nothing but signing a few bits of paper and moving across from one lender to another. And then you multiply that on a 12-month period. That's, you know, approximately just under $6,000. That's $50,000 over a decade, of which you're going to be pay a loan. That's a lot of money. That's a few holidays to Europe. Not that we can go to holidays right now, but that is definitely something people should take more seriously, don't you think, Peter?
Yeah, absolutely. I think that case, I had a client recently where they were under a contract, signed a finance contract, and they had banked with Westpac all their life. And they went and spoke to Westpac, and the bank manager there, who they had a great relationship with, wasn't able to get them the deal up. And I was fortunate enough there that a partner referred that client to me. And it was obvious to me straight away, the client was employed casually, and with Westpac, you have to be in the role 6 months. And she was only in the role for 4 months. And there's only one other choice of lender who would do that. And Commonwealth were able to come, and I was able to rescue that deal for the client and for the vendor and for the agent. And we actually made it work within the finance clause. And that one will settle in a couple of weeks. So it's also knowing which lender suits that client's circumstance.
Of course.
Yeah, totally. Couldn't agree more. Bomber, our favourite viewer, has just jumped back on and just made a comment. So thank you so much for supporting this. There's a few people live watching us as well.
Fan.
He's a top fan, no question, and I'm his top fan. If you've got any finance questions, now's a good time. You know, pop it in the comment section. Peter can answer them for you. A question for you, Peter. If someone had a pre-approval pre-COVID, or say in the last 3-4 months, is that still relevant?
I would definitely want to be getting my pre-approvals updated. So the lenders, a pre-approval is still a conditional approval, and the conditions are usually subject to a property valuation and that your financial situation hasn't changed. So a lender, even if you're pre-approved, is going to want to see your most recent pay slip before going to an unconditional loan offer there. So if you've got pre-approved 3 months or 4 months or 5 months ago, you definitely want to be talking back with your broker and finding out if you need to get that updated, seeing where the lender policies are around COVID, because there's some extra questions they're asking for the submission. The borrowing capacity is still the same, right? Lenders have not tightened up borrowing capacity. So provided that your income and your financial situation hasn't changed, I'd be very confident that you can get that pre-approval renewed. But it is important to make sure it's a valid pre-approval at the moment.
Yeah. Okay.
Peter, are you finding any changes with the current turnaround time for refreshes on pre-existing approvals?
Yeah, look, and that's a really important question. The majors were severely affected, except for Commonwealth, but the other 3 majors were affected because they had a lot of offshore loan processing that was closed down at the start of COVID, and they've really struggled to deal with those volumes and coming back online with their teams working from home. Like National Australia Bank has closed 2 of their buildings in Docklands. The staff had 6,000 staff in there, right? So they're working from home. So they're definitely impacted. But we are seeing that just as our business is getting used to having to work remotely or in a different way, the banks are bringing some of those turnaround times down. At the moment, it's really only ANZ that's got a severe issue. Westpac has been able to bring their turnaround time back in line, and Commonwealth's had a bit of a blowout just because they've had so much volume coming through as well.
Peter, have you seen a difference between the first lockdown and this lockdown, and number of, I guess, what do you call them, just inquiries coming in and people wanting to get moving?
Yeah, that's a really good point. I noticed when you guys were talking before I came online there is still a lot of buyer inquiry. Like we, as loan market in Victoria, set a personal best in settlements, I believe in May. So the lockdown hasn't necessarily slowed up that inquiry. Now, a lot of it has been driven by refinancing to start off with, but the first home buyer market, it was great to hear Nikita tell that story about the first home buyer buying in Cheltenham where they've been waiting for that pocket. That has been very, very active, and they're definitely wanting to get pre-approved. They see any sort of flattening in prices, first home buyers see that as an opportunity. They see, hey, we can get into the market. The investor part of the market has definitely slowed up quite a bit, but we are seeing people take this opportunity to possibly upsize, right? I'm going to sell in the same market, but now I can upsize into a home and I'm not paying that sort of 4 or 5% extra, I'm actually being able to get into that property quite reasonably.
Yeah,
Good to hear.
yeah, that's what we're telling our clients.
Yeah, absolutely.
And we're seeing like my clients are doing that, like exactly that Westpac CBA deal. That's exactly what they were doing. They were upsizing into a family home in Glen Waverley, and they were moving from an apartment. So they saw that as an opportunity in this current market.
Okay. Bridging finance. Interesting question, because we get that asked a lot. We meet so many people at the moment that they want to buy a property, they haven't sold their home yet, too nervous. What if my house doesn't sell in time? Probably the biggest fear right now for people, aside from public speaking, is what if my house doesn't get the price that I hope for, and I found my dream home, I have to have this property. Bridging finance is the way to go.
Yeah, look, absolutely. I think a few people are maybe a bit nervous selling and then not actually having something to buy with the low stock. So where if they can buy something and then we can bridge the time difference while they're still in their current property and the new property has already settled, to give them time to sell their existing property, that's where we can help. Now, bridging finance is still available. There are options. Bank of Melbourne and Westpac and Adelaide Bank tend to be very strong in this area. They understand how it works. The main challenge with bridging finance is just making sure there's enough equity within the properties to make it work. Where bridging finance is a real struggle is when you're wanting to borrow over 80 or 75% of the total equity in the two properties. But as long as we're below that, there's no requirement with those lenders to be able to service the peak debt, because at one time you might be holding $2 million in loans, but you're only holding that for a short period of time. And then once your existing property sells, then you'll come back down to a loan of $800,000 or something like that for the new property. So yeah, definitely bridging finance. Speak to a broker, because if you're just talking to National Australia Bank or CBA about it, well, their bridging finance products aren't necessarily the most competitive in the market, and they may tell you no. Whereas if you're speaking with a broker, they can take you through that journey with some of the other options.
Okay. Quick question. Finance turnaround times. How long does it take at the moment on an average to get a loan approved?
Yeah, it's all about the lender you go to. So we are still, if we take the client to the correct lender, we can still get finance approvals within 14 days. Right? It is about selecting the correct lender. Now, if the client's circumstances dictate that you have to go to a specific lender, that is where we just have to have clear communications to the agent and to the vendor that due to their situation, they've had to choose, say, ANZ at the moment, which is at 3 weeks to even assess the deal for the first time for a purchase. In that case, if you're already pre-approved, then the 14-day finance clause, one is you most probably don't need it. But if you did still want to sign subject to finance due to confidence around your just the situation, that is more than enough time. So getting pre-approved is the key here, Kevin, making sure that you've got your finances and your ducks in a row and all sorted, and then you can sign those contracts with confidence.
Finally, any tips for people just starting this journey before we wrap this up? What are the couple of things they should be doing, I guess, because now it's such a great time. There's people that are ready, they want to purchase a home, there's something that's come up, and if they're starting this process, what should they be doing? Yeah,
absolutely. So understanding your household budget. In the end, banks are lending against your cash flow per month that you can service. So if you can understand exactly how much you spend, how much you earn per month, and you can put aside the equivalent of what the loan repayment would be, and you can show a lender that you're already saving $3,500 a month or $3,000 a month, whatever your loan repayment's going to be, then that's the best start. And that can be mixed with a bit of rent. So if you're paying $2,000 a month in rent, and then you're showing that you can save $1,000, well, that's showing a lender that you can service $3,000 a month in a repayment. That is the best piece of advice I can give to clients, is show a lender that you're already doing what that loan repayment would be due, either through a combination of rent and savings, or if you're still at home or living rent-free, it's just that savings amount per month.
Beautiful. Credit cards, yes or no?
So for every $1,000 of credit card limit that you have is $5,000 less you can borrow. So that's pretty rude. So if you have a $10,000 credit card limit, you borrow $50,000 less for a home loan. So I personally, I don't have a credit card anymore, but they can serve a purpose. But I think with Afterpay, ZipPay, the alternative payday lenders, that maybe credit cards are towards the end of their life.
And would they look at the balance or what your, I guess, your limit is?
They look at the limit. Yeah. So here in Australia, they look at the limit of that credit card. So even if you've got a $10,000 limit and you always pay it off and it never goes over $1,000, they're going to always assume that $10,000 is fully drawn, and that's how they're going to assess your borrowing capacity
so
again.
Bring it back would be
absolutely. Like there's convenience to having your direct debits and maybe some points and stuff like that, but just understand, I think it's not whether they're bad or good, it's about understanding that every $1,000 of credit card limit is about $5,000 less you can borrow.
Good tip.
That's the hottest tip for today. Any other questions from you ladies?
No, I think it's covered up. Really good advice there, Peter. Thank you.
Great.
Really good advice. Thank you so much, Peter. Thanks for joining us today, and thank you for answering all those questions. Guys, Peter's just left. We're going to start wrapping up today's session. Next week we'll join again. We'll talk about the market and what happens over the next few days as well, because it's very interesting times, aren't they? Every day there is a new story that pops up, and we have to adjust to a new market each and every week. Auctions happening this weekend as well, so we'll be able to give the buyers an idea of how they go, and plenty of private inspections booked too. So that'll be interesting, because normally one of the first things we do is meet a buyer and we get to see their face, but not anymore. We can't actually. We won't know who we're meeting, and they won't know if they're meeting the agent they thought they were meeting, just through the eyes. So they say, people can fall in love straight through the eyes. Well, let's see how that goes for people who are on the online dating apps at the moment. We'll come back online next week, guys. Thank you so much for joining us today. For people that are watching us, share this with as many people as possible. There's some really good content we try and cover, and also write down in the comments below any other content that you want us to make future videos on as well. I think next week we'll definitely talk about a few different variety of topics, and we'll include styling and all those sorts of things as well, preparing your home for sale, styling tips, and a wide range of things that I think people have a lot of appetite for. But until then, have a great weekend, guys. Stay safe, don't catch COVID, and follow the rules.
Wear your mask. See ya.
Thanks, guys. Bye.
Bye.